So our next event is a panel discussion. If our panelists can come forward. Most of our panelists are already known to us. We have Hanna Halaburda from NYU, Eric Budish from Chicago, and are we missing someone?
No, Marty's coming.
Oh, okay. I see. Okay. And Martin Chavez from Goldman Sachs. David Parks should also be known to you as well, since he is the principal organizer of this event and was our maitre d' this morning. He is professor of computer science here at Harvard and principal leader of the Econ CS group, whose own interests are very close to exactly the topic of this symposium. Finally, our moderator is Paul Solman, who will be a familiar face to anyone who watches the PBS NewsHour on Thursday nights. Paul is the economics and business correspondent for WGBH and the PBS NewsHour. He has a Harvard connection, like so many others. You were at the HBS at the Harvard Business School at one point, and has taught at Yale and Brandeis, West Point, I think. Mm-hmm. Yes. Paul is in charge.
That's because I ducked the draft and I feel like I owe them, so I go to the military.
So what's your excuse for being at Harvard? Yes.
Right. Yeah, I think that was West Point, but yeah.
You're in charge, Paul. Thank you.
Hi, everybody, and thanks for having me, Brian, and hi to all of you again. So I'm a TV guy who's been around so long that I literally remember the days in which I used to beg to go on the floor of the New York Stock Exchange. And now they beg people like me to use them as a backdrop. So now when I came over here today, I had an Uber driver and who was talking about young and archetypes, so not an unsophisticated guy. And then I mentioned something about the Fed, and he said, "What is the Fed anyway?" And as I was watching all of you and listening to all of you talk, I just thought the gap between people who are not in this room, where people, the public, the people who support he who shall not be named, but I mean, I say that as a joke, but of course that's where the gap is, right? I mean, as so many of us would believe. I mean, that we're talking, language that, the sophisticated Uber driver doesn't know what the Fed is, right? And we're talking at a level here it just reminds me of how the gap is growing. Of course, my living all these years as an arbitrageur, basically, an intellectual arbitrageur, explaining people like yourselves to but a very sophisticated audience, which is the PBS NewsHour audience. And I'm just struck by how the gap seems to be widening, when I listen to you all. And in the last presentation, which was fascinating, but I struggled like hell to follow it at all. I mean, that's even somebody whose job it is to translate these things. I thought that where we would start, and perhaps end, if it takes long enough to just do this, is have you comment on each other's comments and the questions you would have for each other, and comment on presentations like the last one, like Thomas's, that you've heard. Because this is really to stimulate discussion here, and then to get you in, probably not so much to ask questions as to add comments in terms of what you've heard, and I'll try to get you in as best I can. But David, if we could start with you, since you haven't talked since the morning.
I'd be glad to start, yeah. Well, thank you for the introduction. I think about two things. I think about we're seeing businesses become algorithms, which is a very crude way to say some of what we're seeing, but you see what we heard Martin talk about with the API-ification of what's happening at Goldman Sachs. When you take your business processes, your business services, the way you contribute value, and you open them up algorithmically in that way, then clearly you're allowing your business now to be, now parts of your business crudely can be thought about as things that can be called from within some other algorithm. And so we can compose things together in ways that we cannot yet imagine. And you see that with Aviv Zohar's talk about Ethereum and smart contracts very explicitly, where the business process, the contract, the rules of the ways by which the business is operated become algorithmic. We will see that when we hear Keith Chen talk about what's going on at Uber with the kind of labor markets and being able to, in a sense, make these algorithmic calls that are matching together resources and demands. So that's one big trend that I'm seeing here, and it's quite profound, and I don't think we can really imagine where that has been going. But I've been casually throwing around this idea for a while now of maybe we don't need businesses, we just need algorithms. Yeah, let's try to be controversial here.
And then we don't need people either, or just the people who write the algorithms.
Right. So
Can the algorithms write and then we could have people who write the algorithms that write the algorithms.
we have the people that write the machine learning algorithms, and the machine learning algorithms do everything people are currently doing. Yeah. So we don't know where this is going, of course, and there will be profound social implications if this happens. Just the second thing that I've seen, which we've seen, is this algorithms kind of within markets. So we saw that in the talk we just heard, this idea that we can do algorithmic things to improve the market process. So I think of the first thing as being about businesses with algorithms, and you think about there's a second thread, which is markets becoming more algorithmic. We saw it in Eric's talk. You couldn't have these 1 millisecond clearing time auctions if that was being done by people on the floor of the New York Stock Exchange. You need an algorithm to do that.
I love the fact that 1 millisecond is a long period of time to wait for these things to happen. So respond to that if you would. I mean, in your talk, you were talking 600 traders down to 2, right?
That's right.
All replaced by algorithms, right?
And the people who write the algorithms.
Uh-huh.
So what I didn't mention is that there's 150 mathematicians and software engineers in that same business that we didn't have 10 years ago.
But they require more training, and
there's
it's one and a quarter,
of them.
one
It's about
quarter.
and we typically find this odd ratio of 1 to 4, right? 1 engineer over the cycle will substitute for 4 human beings who used to do the job.
Really?
And
But Goldman Sachs hasn't shrunk, has it?
Yes.
Really?
It is slowly in a lot of dimensions. For instance, in the share count and also the employee count, it is slowly getting smaller, but along all other dimensions in terms of volumes and other important financial metrics getting bigger.
And the idea of Marcus is to get much bigger still. Finally go out, not wholesale anymore, but retail.
But retail, which we're doing very slowly because we have never been much of a retail firm. But one thing that I'm struck with, while I'm obviously excited about these trends, and it's great for math and computer geeks, definitely, though a little bit disconcerting for people who are not. There's definitely a couple of bewildering aspects of it, and David touched on one of them, which is we don't know how these combinations driven by APIs will actually work out. They're recursive and they're combinatoric, and I'll give you an example. When Google invented the Google Maps API, you could ask, well, why didn't they just go on and invent Uber? Because Uber sits on top of it, and Google has an awful lot of smart people, and somehow they missed it, or maybe they thought of it and just left it to somebody else to execute. But the point is that you have Google Maps over here, and then you have Stripe API over here, and then someone outside comes and sees, oh, I can combine them. And you also have to combine it with judgment and innovation. There are myriad other interesting things that Uber did that were not just purely algo-driven. For instance, figuring out how to get the party started, using some of the cash they raised from their shareholders to incentivize Uber drivers to hang around on street corners waiting for that first Uber passenger, because it was important that when the first Uber passenger showed up, there was a driver, right? It was a chicken and egg problem. So they put a lot into it. It wasn't just the APIs. There's the interaction with regulators and other stakeholders. It's very complicated. But the point is, you get something qualitatively different by combining these APIs. That's great. You also get new kinds of risk that didn't exist before. So operational risk, cybersecurity being the most obvious example, many, many more things that can go wrong, and they can go wrong much faster and cataclysmically.
Yeah, we'll get to that. Hanna, you were the closest thing we have on the speaker so far to an algo skeptic. So, I mean, is it?
You're right. I'm the closest thing.
Yeah. By the way, it's the first time I've ever uttered that phrase before in my life. I just want to say. But speak to this issue of everything becoming algorithmic.
So yeah, exactly. So in this context, I think that there is also another role for people aside of just writing algorithms. So looking at Aviv's talk and looking at Eric's talk, people are really busy in taking advantage of algorithms, trying to figure out how to beat the market. So this is why I am looking forward to Thomas's poker game to see whether we can finally get the machine to beat the people, or is it going to be the case that every market design, every algorithm that we are going to design, people are going to find a way to get around it, to find this one line of code that is going to let them cash out where they were not supposed to cash out. So do we also need algorithmic policemen to make it work? In this, so I don't think we will be able to take out the human element. It's just it plays different role, but not just. I mean, yes, overseeing the algorithms, but overseeing how people are using the algorithms, and this is where market design comes in, and it is very important. And the more automatic we are going in market design, the more important the little details will be. Because if one line of code can cause $50 million losses, then suddenly one line of code really matters a lot.
And I think your point on policemen, it's happening already. So when my nieces and nephews ask me what advice would I give them about what to study, so many years ago when I was 10, my father said computers, and I took him very literally, and I went with it. But now I tell my nieces and nephews, double major in computers and law. We simply cannot find in the quantities that we need people with both sets of expertise at this intersection of law, regulation, ethics, right? Just because an algorithm can do it, should we do it? What are the unintended consequences? I think there's going to be a lot of jobs happening over there.
And that's where you are. I mean, that's what your talk was about, right?
My talk's at the intersection of, I guess, computers, law, and economics. And I actually thought you were going to, Marty, talk about the intersection of computers and economics. My father said, whatever you do, when I was 10, whatever you do, don't be a lawyer. He's now retired after 45 years practicing law. But I completely agree with the spirit of that. You know, there's a requirement to get engaged in the algorithmic details of markets, but also the regulatory details of markets, but also the economic details of markets. And especially for the students in the room, I would encourage you. I'm not an algo skeptic. I don't think Hanna's an algo skeptic.
No, I said the closest thing.
Closest thing to that. But what I agree, I very much agreed with the spirit of Hanna's remarks during her talk, which is that if there's an economic problem, and you're using an algorithm to solve an economic problem, but the algorithm doesn't actually solve the economic problem, if it's an incentives problem, for instance, like in Hanna's talk, I think that can lead you you have a hammer and you're sort of hammering at the wrong nail. It's so I think algorithms. I fear the future David describes if it's if those writing the important algorithms in our society are not also cognizant of all of the surrounding issues, to economics and law being two of the most salient, but all of the other issues that surround as well.
But isn't that exactly what the problem that you're trying to solve? It's like spy versus spy in Mad Magazine. It's algo versus algo, right? On this high speed, the extra 3 milliseconds and so forth, or how much a nanosecond is now worth.
Yes. So fortunately, nanoseconds. The company arguing that nanoseconds matter is selling a technology that speeds you up by about 4 nanoseconds. So I don't know. I don't know that we want to.
Well, there's an incentive for you.
They're talking their book. But no, I agree with the spirit of your comment. It's a.
So there's actually a lot of attention right now in computer science and AI and machine learning on things to do with the distributional effects of technology, to do with the decisions that are made. Is it a fair decision? How do we even think about defining fairness? And we've thought about privacy quite a lot recently as well, and there's been some nice advances there. So I don't want to give the impression that computer scientists are not taking these concerns extremely seriously. I do believe that given that we are getting inevitably more algorithmic, that we will need formal mathematical ways to know that the algorithms are doing the right things. It's not going to be scalable to have human lawyers checking things. So it's not that the engineers should be bringing the norms to the table, but the engineers need to be at the table with the ethicists and the other folks helping to shape that discussion, because ultimately we need something implementable.
But that's happening, right, with the self-driving cars, the decision about whom to sacrifice if the occasion should arise, right?
A lot of discussion of that, yeah.
So Hanna, you listening to all these talks, started with David, what questions do you have or comments do you have about what other people have said? You've already gone into that a little bit, but please.
Well, so, I mean, I'm just wondering, given that I have Martin here, and I'm thinking about incentives to participate in the blockchain solutions, is what drives Goldman Sachs to participate in some of those initiatives and not in the others, and how those decisions are made, and whether to confirm or deny my implications. It's all about incentives, and there are incentives to cooperate and compete at the same time, and it makes it difficult for us to move forward.
And just one thing, for those who didn't hear it, you were talking about Goldman Sachs having pulled out of one of these very consortiums, right?
Yeah, yes.
Yes, so that's a great question. So we have a group that I'm ultimately accountable for, and it's one of maybe 5 different investing arms of Goldman Sachs. It's called Principal Strategic Investments, and I've looked after it for about 10 years now. And the R3 was one of many opportunities that we were evaluating in that business. And so even given our capital resources, we also have constraints. There's 20 people in this group, and they are evaluating all of these investments, including investments in hardware acceleration and cryptography and like the whole universe, of which blockchain is an important part. And there's a small number of people. And the last time I saw the list that the team made for me, they had enumerated 50 different blockchain initiatives of various kinds. And so we just don't actually have the capacity to participate in all of them. And yes, we're looking for the ones that have the most upside for our clients, which we invariably find is also good for our shareholders. And in that context, we just got more excited about some other blockchain initiatives. I don't know if you know of a company called Axoni, but in the same week that we moved our attention away from R3, we actually made an investment in Axoni, which is doing trade processing applications on the blockchain. And we also are a participant in digital asset Holdings and Circle Internet Financial, which is a Boston-based company doing interesting things. So I think it's got to be something that's inspiring for us, and we've got bandwidth constraints as well. I think that blockchain, as I mentioned earlier in my talk before I heard yours, is something that I think will be one of the 4 big drivers that I'll add to my list of APIs and cloud services and open source. But I think a lot of that is on the come, maybe not exactly here yet today.
So just a follow-up question on that. If,
Get a little closer to the mic so everybody.
if when you decide in which of those blockchain companies to invest or which one to pursue, do you think only about how the particular blockchain product is going to appeal to Goldman Sachs, or do you think about how other companies are going to get on the same blockchain solution, or they are going to support the same blockchain startup?
So it's definitely, it's a network effect, right? It's got to be something that becomes broadly adopted. And this is something I was mentioning to David over lunch. And this is really not intended as any kind of criticism of R3 in particular, but we're just finding this generally. We are moving away from the consortium approach. And we have been moving away from that for some time. And there are at least 2, maybe 3 reasons why we're just less interested in consortia than we used to be. Right?
Does it have anything to do with incentives?
Yeah, it does, of course. We used to be interested, well, there used to be consortia as really the way of getting this network or party effect going, right? You would get all of the big banks together. Well, there's a bunch of problems that arise, and it does come back to incentives. So when you design by consortium, you get the proverbial camel, right? You get something that's got a lot of features, but maybe it's not too pretty at the end, and maybe no one is really happy with it, and that's just designing by committee generally. The other huge issue with consortia is no matter how hard you work to make them inclusive, they're almost never inclusive enough. And so getting a bunch of big banks sounds like a good idea, but what about all the bank's customers, right? So any consortium that's missing the bank's customers and that doesn't have the bank's customers as well as the banks is also problematic. So something that we've been doing that we're getting excited about, and it's starting to work, and we have a few projects like this. The one that's gotten the most traction is called Symphony, which we are thinking of as a platform for the whole financial industry, is really open source. And so the idea is we will write something, and this is what we did in Symphony, and then we'll take the full write down for everything we spent on writing it and give it away into an open source foundation. And that's going to govern the software itself, and then set up a company around it that's selling services and add-ons and installation and solutions, and then making sure the ownership of that company is very broadly distributed. And we find that a more effective way. So I would just encourage any blockchain initiative that looks like that is going to be much more exciting for us.
Is the network effect the reason you said the dating sites were like blockchain?
Yes, exactly. That's the network effects and the network dynamics that Marty is talking about is present in other technologies and in other platforms. And this is why, I mean, I'm glad that you are confirming, but this is exactly what comes out of the analysis of looking at the blockchain technology and adoption or lack of adoption of blockchain technology so far, with the network effects problems in mind, that we want to get everybody on board. How are we going to do it? How are we going to get the owner? Who is going to own the network? How are we going to prevent the abuse of ownership of the network and adoption of the network?
I think open source has to be a part of it. If it's not open source, we're probably not going to be too interested. But as we've seen with Bitcoin, the radical extreme of open source with nothing like the Wikipedia editing infrastructure is also problematic.
Exactly.
Eric, questions for or comments about other panelists' comments?
Thanks. Let me make a comment about Thomas's talk, which I found remarkable and quite inspiring. And I was left at the end. I guess let me say one optimistic point, and then a more despondent point. So the optimistic point is I think the power of what is accomplishable with the set of tools market design researchers like Thomas bring to the table, where if you bring, in Thomas's case, the lead tool is computer science and optimization and integer programming, but it's surrounded by a concern for the economics and a concern for the institutional details of the market he's studying. So I think there are profound complementarities between economics and computer science, and between the use of theory, whether it's math or microeconomic theory or algorithmic theory and data. And I think that if I were a student, I would make sure that, not to be a generalist jack of all trades per se, but I would make sure that if computer science is your passion, that you also learn some economics. If economics is your passion, you also learn some computer science. The despondence is that despite all of the great work that's being done by Thomas and by many others on kidney exchange, there's still 100,000 people in the United States on the organ donation wait list. And this to me, my perspective on this has evolved over the last several years as I've been doing the high-frequency trading research and thinking about what are the various obstacles in the world of getting good ideas that we discover here in the ivory tower from research into practice to have practical impact. And you wouldn't at first think kidney exchange and the high-frequency trading stuff I presented have anything to do with each other. One immediate difference you might notice is that there are high financial stakes in stock exchanges, and in the kidney exchange case, it looks more like almost like a social entrepreneurial venture that Thomas and others are engaged in. But then when you look into the details of what are some of the obstacles to kidney exchange being more widely implemented and saving these 100,000 lives, and that's a flow, not a stock. A lot of the obstacles are economic obstacles and political economic obstacles, so the incentives of hospitals that don't fully participate, or the incentives of those earning rents from dialysis. Medicare currently spends a lot of money on dialysis and is not willing to. There's complexities in the way Medicare reimburses participation in kidney exchange. So I think, on the one hand, it's so inspiring, and on the other hand, I'm left wondering, is there more we can do as academics to get our great ideas from research out into the world, which, to Paul's opening remark, I think it is as important now as ever.
Yeah. So, Marty, you, with regard to other panelists, questions you might have for them.
Sure.
Thomas, remember.
Well, one for Thomas, this may seem micro, but I'm just absolutely obsessed and stuck with the 33. Where does the 33 come from?
The 2 out of 33.
I thought, is it 1 over E? No, it's not that. It's just 33. So we can talk about it afterwards, but there's got to be something deep there.
That's a very idiosyncratic question.
Right, but two, I get used to seeing 2, but
let's not go there.
So maybe I'm the only person.
It was hard enough following it now to hear that there's even something beyond that.
No, but actually, to something I'm taking away from Hanna's and Eric's talk on incentives, and I know you came and talked to some of my team on the topic of these discrete time continuous auction exchanges, and yet, and everybody in that meeting agreed it's important, it's essential, it has to happen, but it hasn't actually happened. And I think the solution actually is for people from academia to start an open source project, seriously, that actually implements it. I think that is by far the most promising start, but the incumbents don't have the incentives to to do anything much, much
And
different.
if anybody has about $50 to $100 million to write the code and go through the various regulatory processes, please give me a call, and I'd be delighted to champion that.
Eric, I think you're looking in the wrong direction.
I was looking in that direction on purpose.
Oh, I see that. You were averting your
What are
your
you
gaze.
waiting for?
I want to, but speaking of that, IEX has happened, right?
Yes.
Why IEX is the exchange in the Michael Lewis book? Those are the Flash Boys, right? So how come that's happened and what you're talking about hasn't? I mean, or is IEX so different that you don't think of them as the same?
That's a great, and I'm trying to think of how in how much depth to answer that question. I mean, so the very surface answer is that IEX is a business venture that is off in the world doing something, and I'm an academic writing papers and talking to people.
Okay.
So that's the most causal explanation for why is IEX out in the world and frequent batch auctions is not. I think there are subtler explanations as well. I mean, why did IEX adopt the design they adopted?
You should just
and not
explain
adopt
briefly what IEX does.
frequent batch auction design, I think, is to some extent a reflection of strange regulations for stock markets in the United States that I don't think we want to get into if you're.
And NMS specific.
Yeah, Reg NMS and so Regulation National Market System, which the optimistic take on Regulation National Market System, and it's got some good features, is imagine if every time you open your Uber app, you're also mandated by law to open your Lyft app, but Uber and Lyft were mandated by law to make data about prices and ride times easily electronically accessible. That market structure would induce fierce price competition and fierce competition on whatever was easily measurable. So in the case of stock exchanges, it's fierce competition on price. It crowds out competition on other dimensions, and also a difference between the Uber-Lyft thing and stock exchanges is that in stock exchanges, small amounts of latency matter. So if you get into the plumbing of regulation, national market system, and you kind of read through the text of the regulation, which I have in my office, it's pretty thick. The drafters clearly didn't foresee the importance of geographical and communications latency between exchanges when they drafted the law. So it's got, I don't want to get into the details, but
Is the reason, Martin, why you suggested that Eric's product be open source? And I'm trying to think about the reasons, because this essentially cycles back to incentive questions again as well. Two reasons, maybe one, by having it be open source, then you get folks to voluntarily contribute their time, so Eric doesn't need his 50 to 100 million. But the second reason, at least another one that occurs to me, is that then things are more transparent, and if people are really going to move to this new platform, you're going to need lots of eyes looking at it to validate and verify that it's doing the right thing.
Yeah, there's very few companies, there are some, that could assemble the math and software talent to really understand it and refine it and take it to where it needs to be. But I think open source is really the only way to get it there. And because it's novel, right, I'm not privy to what IEX was doing, and I think you might have talked to them when they were already in progress, but they had a choice. We could attempt to understand Eric's ideas and make them real working software, and as we all know, there's a huge spread between prototype and working software, or we can just buy a few miles of fiber optic cable and run it in coils, and that would be a pretty easy decision for most people, I could imagine.
Yes, so people in the audience, let's get you in on this, and this would be, so let's, over there, a hand over here, so let's get and just raise your hands and I'll make sure you get the next microphone, or get the microphone next, please.
Hi, so from what I understand, the discussion has thus far focused on these platforms is the ownership of the platforms and if they're commercial or open source, and I haven't really heard the architectural discussion. So for example, the internet and its pervasive success can be architecturally attributed to the hourglass model, where the IP, the Internet Protocol, has separated all the different data link and protocols that have been developed underneath it and are still running, as well as the applications, if you will, several layers, and whether they're commercial or open source, it's a completely different, it's just decoupled the two, and that's why it enabled this rapid growth. So they were talking about fiber optic cable, which will still run on the internet, right? As well as whatever application you can adopt that somebody has developed in academia or industry. So my question is, I'm not seeing that in blockchain, where in order for blockchain to be adopted, there needs to be something similar where the contributors, the computer scientists, whether it's companies or academia, are creating platforms, whether open source or commercial, and then we can actually go use them in the real world. So I'd like to hear from the panel overall about where they think this, is it possible, and how can we achieve that?
Let's start with our blockchain expert, Hanna, if you would.
I can also jump
Yeah.
in.
So I will let David start.
Okay, please.
So obviously, yeah, the end-to-end principle has been very successful with internet. Of course, these technologies generally that we've been talking about are leveraging internet IP, but the blockchain actually fits your story extremely well. The blockchain technology in the general form is a decentralized, trusted ledger to commit things onto it such that we can all have the same shared view. It's actually, that technology as a technology is agnostic as to what it is you're writing onto it. It's true that the blockchain applications that have been getting attention are about digital currency, but I'll hand over to Hanna now. There's a lot of interest in doing other things with them, and we heard Aviv allude to the types of other things that are happening. So I think it actually fits your paradigm very well.
So I'm not so deeply familiar with the structure of the internet to follow all the details here, but the way I see is we all use the same internet. Internet is not proprietary, and on the top of the internet we are building proprietary applications, but we all can access it through the internet. And here we may say that there is analogy to, we have a blockchain, and blockchain is agnostic, and on the top of the blockchain we are going to apply applications that may be proprietary or open source. The problem is that the question is, how are we going to get different applications on the same blockchain? Are we going to be on the same blockchain? Because so far every application of the blockchain means that it's a different blockchain. But then some blockchains are proprietary in the sense that they are closed and permissioned, and other blockchains are open and like Bitcoin blockchain and not proprietary. So it is not a perfect analogy to saying that the blockchain is the rail, which is non-proprietary, we all can access it and then build proprietary applications. There would be proprietary blockchains and non-proprietary blockchains, and how are we going to solve that?
Use the mic. Let's give her back the mic, just because people in the back won't be able to hear you.
You're actually proving my point. So David said the paradigm fits well, but it's not implemented. There's no standard, let's put parentheses, quotes there, API on which you can write the applications, and you can use the various platforms. Goldman Sachs can create them, or Harvard computer science department can create them, but they all adhere to the same platform from the top and from the bottom. So that doesn't exist. And if it did, then that would solve a number of the problems, both that Hanna's talking about and from Goldman Sachs or Merrill Lynch.
Well, just briefly, I would just add, personal view, part of the problem is that while the decentralization and the openness is incredibly appealing, in the protocols that have become standard, such as TCP/IP, there's some kind of authority right? And now there's all kinds of issues. Is that authority ultimately the US government that needs to be globalized, right? This happens with ICANN. You get into a whole host of problems, but to my mind, one of the issues with Bitcoin is the failure of, or the non-existence of a Bitcoin foundation. I think there used to be one, and there isn't. And there is a Wikipedia Foundation, and there's all kinds of flame wars inside Wikipedia, like what's open and what's censorship, and striking a balance. I think it's hard to do, and I'm not sure that that's happened
And
with
this
Bitcoin.
is the essence of your critique, right?
Yes, so that if it's completely decentralized, like if we want to overcome coordination problems, then we need somebody that is going to help us coordinate, and it could be the owner of the network or a consortium that we know that kind of fail in incentives, or if we want it completely open source, it usually completely decentralized. It usually doesn't work.
Right over here.
Hello. I was just kind of wondering, so we're talking about various areas of innovation, specifically in finance. What are some of the challenges of a platform approach and a regulatory environment that requires silos, right? Martin, referring back to your slide with the competitors, there's a historical reason, right, that they have these business lines that are separated. So how do you integrate everything into one central data store when you have laws around like having a Chinese wall between asset management and trading?
Right. Actually, it's a fantastic question. It's our discovery that having strong APIs is actually the best way to create these Chinese walls. The term that's always troubled me with the Chinese wall, where is it? What is it? What does it look like? Oh, it's not actually a wall. It's a metaphor, right? And sometimes the attempt to reify that metaphor by actually creating physical barriers and doors with keys, well, I understand that, but everything needs to be separated, and having the physical separation of office space is only a part of the problem. And so we're finding that having strong API contracts with data hiding and strong guarantees of information non-leakage are actually the best way to implement these regulatory constraints.
Eric, you have any comment on that? Anybody have any comment on that? You have a question over here?
I have a question here.
Where is it? Oh, hi.
So what I'm observing is that, this reliance on the internet examples is not addressing two things, which is that security and trust are not in that. So I think a lot of your questions here about even the isolation and the Chinese wall are that I'm not necessarily sure you're relying on the cloud and the internet to provide an infrastructure for trust that may not be there, and are any of you looking at that?
Well, the trust problem is an immensely complicated one, and the tool that we have for trust is really encryption, right? And you could almost say it's the absence of trust, right?
Right.
We only put things in the cloud when we're comfortable with the encryption at rest and in motion.
Is it public key-based and then relying on an authority or peer-to-peer? So you need to address the naming.
Or relying on the
and
hardness of
distribution.
computational problems that is indeterminate. It's hard.
So there are some fundamental things that I think we need to look at from a computer science perspective.
Yes.
And formal models.
Yes.
You raised this earlier, and then I said we'd get to it later, which is how vulnerable are we? I mean, as individuals, as firms, as a country, as a world? Hanna, start there. Go around. You guys get some time to think about this. I mean, when people like yourselves talk about, sort of offhandedly, as you did, about how vulnerable we are, I want to know how vulnerable we are.
Well, so I mean, here I don't have a significant computer science background, so I can't talk about vulnerability to hacking. But if I remember, when I remember Avi's talk about the hacker that was asking for ransom and was cashing in
Yes.
in Russia, The question, I mean, it's probably a pretty straightforward conclusion that the more connected we are, the more vulnerable we are, and the more tools we need to protect, to encrypt, to protect the information, our systems. And this is why when I was talking about trust from the point of view of trusted institutions that are going to be running things, and we kind of need it, whether it's Wikipedia's editing or some any other application, then we need even more trust. We need to hand in more trust to some institution to protect us against more threats from the whole international internet community.
How are the good guys doing in the cat and mouse game, David?
The good guys, I would say that generally we're getting to a better place as we push more technology into, let's say, the cloud providers who have the expertise and the smarts to get things right. I worry more about just having technology be not adequately invested in by smaller players, and then they become vulnerable. Ironically, it appears the government is an example of that category.
Yes.
But hopefully that will get better. We will see.
When you look at this Central Bank of Bangladesh hack that I mentioned, apparently they were using $10 Radio Shack firewalls and routers that were also misconfigured, right? So that is a problem, and they might have been better off in AWS.
Comment here, Eric.
I'm not going to have the last word on what is our society vulnerable to. I'm be glad to leave that to David.
I want to end on an upbeat note, though, which is there is something to do about it, right? So I think whenever you have a central point of failure, that's a place to look. And that's the reason that I'm excited about distributed blockchain general ledger technologies. I think when we can replace something that's a single point of failure with something that's massively distributed, that's a profound mitigant.
Thank you all very much. Thank you all.